Hey guys, I'm Roger Herring. I'm the Investor's Accountant, and thank you for coming by our YouTube channel. Before you leave today, be sure you hit subscribe and click the bell. That way you won't miss any of our free educational videos. So right now, click subscribe, hit the bell, and a great video is coming your way right now. Hey there, I'm Roger Herring, and I am the Investor's Accountant, and welcome to an edition of Tax Update. Hey guys, there's something that is happening to real estate pros in the tax court, and it's not pretty. Recently, a gentleman was in there for a court case, and the court disallowed his real estate deductions on 4 out of 6 of his rental properties. That's not good. So, first, let's talk about the requirements of being a real estate pro, and then we'll talk about the third requirement that most people don't realize is there. But this is what the tax court honed in on. Okay, so number one, you have to have a minimum of 750 hours a year in a real estate profession as an owner. That can be as a broker, an agent, a flipper, a wholesaler, a landlord, a property manager, a residential home builder. All those professions count. 750 hours minimum. And more than 1/2 of your for-profit time must be spent in one or more of those professions in real estate. If you have a W-2 job, you have to have more hours in real estate than you do in your W-2 job. But there is a third requirement, folks, and this is what the tax court honed in on. You have to be able to prove that you materially participate on that rental property. Now, how do you do that? Well, there are 7 different ways that you can prove material participation. But there's really only about 3 of them that apply in general to you guys. So here's the deal. If you're a small-time operator and need to prove material participation, let's say you have 3 properties. As long as you substantially do everything on those properties, then you materially participate. Well, Roger, I hire somebody to come and cut the grass when there's no tenant in there. That might be a problem. So let's look at the second way that you can prove material participation. The second way is to have 100 hours on each property and nobody else has more time than you do. Well, Roger, this is my rehab year and I've got contractors out there. Yeah, that means to prove material participation, you have to have 100 hours and more time than your contractors. You have to track your time and the contractor's time. Now, here's the easiest way when you have properties to prove that you materially participate. It's called an aggregation election. This is an election that is made one time on your taxes, and this combines and treats all rental activities as a single business. And what we're doing here now, we have aggregated the properties. All you have to do is have 500 hours across all of your properties and you're good to go. The tax court honed in on the material participation and decided that yes, you did not materially participate on 4 of them, you did on 2 of them, so we're going to give you the deductions for 2 of them and disallow everything else. Material participation, guys, it'll make you or break you, but I got some good news. You know, people ask me all the time, for my 750 hours, can that be me and my wife combined? And my answer is no. One of you has to qualify as a real estate pro outright with the 750 hours. But guess what? If you're a married couple, you can combine your time to make up the material participation hours. That's right. So your wife could have 250 and the husband could have 250 to get the 500. But one of you has to have a total of 750 in there somewhere. Okay? That's all for today, gang. If you got questions, shoot me an inbox. Make a comment down below. We'll answer them. Until the next time, Roger out.